Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can notice is that we have a market which has just broken out from a quite important structured zone. This level was acting as previous resistance for many years. Every time the market tested its zone, it respected it as resistance and rejected it to the downside. Then we had the breakout to the upside with this impulse. And what we know is that a previous level of resistance, once it is respected as resistance in multiple occasions and then broken to the upside, the next logical step is for that previous level of resistance to become support. So what you would naturally expect is for the market to go for the retest of the previous resistance turn support and then to reject it to the upside, which is exactly what happened here. The market broke the level to the upside, went for the retest, and then continued with the rejection to the upside. So from a monthly standpoint, everything is very clear. We can also notice that the uptrend so far has been developing in a quite textbook way, with the market creating a series of impulses and corrections, every time creating new higher highs and also new higher lows, which is exactly what you expect in the case of an uptrend. We can notice how the last move was the creation of this new monthly higher high. So the next logical step would be a correction for a new higher low and then yet another higher highs. That is how the definition and developing of a textbook uptrend is supposed to work. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, situation is quite clear as well. We can notice a strong impulse to the upside. Then we had this consolidation period in a form of a triangle formation, which is quite common in the market. You have an impulse, then the market creates a triangle, essentially consolidation period, and then the continuation to the upside. And this is how essentially many times the market likes to behave, and we can notice here that that is exactly what we have. We have the impulse to the upside, then the market created this triangle formation here, which we can easily identify, and now the market is in the process of creating the continuation to the upside. So here on the weekly time frame, everything is quite clear as well. However, we can notice how the market at the moment does seem quite overextended to the upside and in need of a correction before continuing higher. No market can just go up in a straight line. Every market needs a series of impulses and corrections along the way. We can see, for example, here, this is the natural movement of the market, a series of impulses and corrections. Now, since the last move here was the creation of this strong impulse, there is a good probability that now institutions will start opening some shorts, potentially pushing the price lower. Now, speaking about institutional longing, what kind of situation we have when it comes to the commitment of traders and what the big players in the market are doing? Well, if we look at the data for gold, what we can see here is that with the last report, institutions have now added a quite big amount of shorts. We have 15,000 shorts added just with the last report. So even though in the long term, yes, net positions are increasing, we went from 247k to 302k net positions. So clearly in the long run, institutions are moving aggressively to the bullish side for gold. Anyway, with the last report, we are seeing massive amount of shorts added, meaning that institutions are now aggressively selling gold. And this could mean that they do expect a correction. So in the long term, they're still very bullish with 356k longs compared to only 53k shorts. But just with the last few reports, shorts have been increased from 33K to 53K. So we essentially had more than 10,000 shorts added from an institutional perspective, making gold a bit weaker. And that means that essentially institutions are expecting a potential correction from here. Now, I did speak about gold quite a few times in the past. I spoke about it after this M pattern, explained all the reasons from which from here I was expecting this push higher. Then again, from here, I made a full breakdown explaining all the reasons for which I expected first this correction and then the continuation. Again, when the market was here, I explained all the reasons for which I was expecting a retest of this previous resistance turn support and then this push higher. Again, after this impulse and correction, I made a full breakdown when the market was here, explaining all the reasons for which I was expecting this rejection to the upside. And again, that is exactly what the market did. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. But at the moment, what do we have? Well, at the moment, from a daily perspective as well, it is quite clear how the market has created this overextended W formation and is, in fact, looking like an overextended market to the upside in need of a correction. We can also notice how we already had a slight slowdown. We started with this massive impulse to the upside, then we had a red candle that the market tried continuing higher and failed. And this combined with the fact that institutions are adding massive amount of shorts increases the probabilities of a potential correction from this zone. So in a situation like this, what would I expect? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, where we have a strong resistance around here, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes. So 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, I wouldn't be surprised to see a potential rejection to the downside away from this area for the market to retrace at least to the 0.32 of the Fibonacci taken on this impulse. Like that definitely wouldn't surprise me. Now, all this general free education and analysis that you see me provide on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go and check out my transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to all my courses, starting from the very basics of charting all the way up to the more advanced topics like how to build automated trading strategies using the MQL4 language, how to build portfolios of strategies, and using quantitative finance tools like the Quant Analyzer to actually build those portfolios of strategies. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations. You can get one-on-one mentorship directly with me. Also, you can gain access to the COT data software, which you often see me use on my YouTube channel. This is an all-in-one program. In fact, on top of all of this, you also have the possibility to gain access to all my personally developed EAs, so my automated trading tools. Here, you will see all the presentations of each and every one of them. And also you have the possibility to gain access to the trading show. So essentially a live stream of all the trades happening in live time from my live account. And if you continue to scroll down past the testimonials, you will see that you can also find the button to join now, and you will essentially be put in contact of my WhatsApp number. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in my next video. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.